If you receive an age pension, a disability support pension, or the carer payment in Australia, listen closely, because come September 20th, 2026, the numbers on your Centrelink statement are about to change, and if you don't prepare properly, you could either miss out on money you're entitled to or get caught off guard by a change in how much you receive. Stick around for the next few minutes, because I'm going to walk you through exactly what's happening and the 5 things every Australian senior needs to do before this date arrives. Welcome back to MoveSmart AUS, the channel dedicated to helping Australian seniors and retirees make sense of pensions, superannuation, Centrelink rules, and all the financial changes that seem to happen every single year without much explanation. If this is your first time here, consider subscribing because we cover exactly this kind of practical, no-nonsense financial guidance for older Australians. Now let's get into what's coming on September 20th. Every year, twice a year, in March and again in September, Centrelink reviews and adjusts pension payments based on inflation, the cost of living, and wage growth. This is called indexation, and it's designed to make sure that pension payments keep pace with rising prices. The September adjustment is coming up, and depending on how inflation has moved over the past 6 months, payment rates could increase, income and asset test thresholds could shift, and deeming rates used to calculate income from your savings and investments could also be updated. Here's why this matters so much for you. Even a small change in the pension rate or the asset test thresholds can affect how much money lands in your account every fortnight. And if you're not paying attention, you might miss out on an increase you're entitled to, or worse, you might not realize your circumstances have changed in a way that affects your eligibility. So let's break down the 5 things you need to do before September 20th arrives. Number 1, update your assets and income details with Centrelink. Many seniors set up their pension years ago and then never touch their file again. But if your savings have changed, if you've sold a property, if you've received an inheritance, or if your investments have grown or shrunk, Centrelink needs to know. When the indexation changes hit, having outdated information on file means your payment could be calculated incorrectly, and you could end up either underpaid or, even worse, overpaid, which then has to be paid back later. Log into your MyGov account or call Centrelink directly and make sure everything on file reflects your current situation. Number 2, understand the deeming rate changes. Deeming rates are the rates Centrelink uses to estimate how much income your savings and investments are generating, regardless of what they're actually earning. These rates get reviewed periodically, and any change here directly affects your assessable income under the income test. If deeming rates shift in September, it could either help or hurt your pension calculation depending on your situation. Take the time to understand what the current deeming rates are and how they apply to your specific savings and investment mix, because this is one of the most misunderstood parts of the entire pension system. Number 3, check where you sit against the asset test and income test thresholds. Every indexation period, these thresholds can move, sometimes up, sometimes just staying flat while other numbers shift around them. If you're sitting close to a threshold, even a small change could push you into a different payment bracket. This means you could see your pension amount increase or decrease based purely on threshold movement, not because anything in your life actually changed. Knowing where you stand before the changes hit means you won't be caught off guard by your next payment. Number 4, review any part-time work or additional income you're earning. A lot of seniors take on part-time work, consulting, or small business income to supplement their pension. The income test has a work bonus scheme that allows pensioners to earn a certain amount before it affects their payment, and these thresholds can also be adjusted during indexation. If you're currently working or planning to pick up extra hours, understanding how the updated work bonus thresholds apply to you before September 20th can help you plan your work schedule in a way that maximizes both your pension and your income. Number 5, mark your calendar and check your MyGov account on and after September 20th itself. Don't just assume the changes will automatically be communicated to you clearly. Log in, check your payment summary, and compare it to your previous statement. If something looks off, if your payment dropped unexpectedly or didn't increase the way you anticipated based on public announcements, contact Centrelink immediately rather than waiting weeks and wondering what happened. Payment errors are far easier to correct quickly than after months have passed. Now, here's something else worth mentioning. Every indexation period, there's a wave of confusion and misinformation online, with people making dramatic claims about pensions being cut entirely or eligibility rules being completely overhauled overnight. Be cautious about where you get your information. The most reliable source will always be the official Services Australia website or speaking directly with a Centrelink Financial Information Service officer, which is a free service available to every pensioner. These officers can walk you through exactly how the changes affect your specific situation, and it costs you nothing to book an appointment. It's also worth mentioning that scammers love to take advantage of these indexation periods. You may see emails, texts, or phone calls claiming to be from Centrelink, telling you that you need to click a link or provide personal information to keep receiving your pension after the changes take effect. This is almost always a scam. Centrelink will never ask you to click a suspicious link or provide your bank details over text message. If you receive anything like this, don't click, don't respond, and instead log into your MyGov account directly or call Centrelink using the number on their official website. The bottom line is this: pension indexation happens every single year, twice a year, and while it's designed to help pensioners keep up with the cost of living, the changes can be confusing and easy to overlook if you're not paying attention. By updating your information with Centrelink, understanding deeming rates, checking where you stand against the thresholds, reviewing your work bonus situation, and actually checking your account once the changes take effect, you put yourself in the best possible position to benefit from these adjustments rather than being caught off guard by them. If this video helped clear up what's happening with the pension changes coming this September, please give it a thumbs up and share it with another senior or family member who receives Centrelink payments. Because a lot of people out there have no idea these changes are even coming. And if you want more videos breaking down pensions, superannuation, and Centrelink rules in plain, simple language, make sure you're subscribed to MoveSmart AUS so you don't miss the next update. Thanks so much for watching, take care of your money, and I'll see you in the next one.